It's the morning drive. It's Mirror Business FM. Good morning to you. The UAE's virtual asset sector is ever evolving. Regulators are placing greater focus on governance, on compliance and investor protection. And it's as the market matures. Joining us this morning is Zana Jablan Musa. She's the operations director for the Middle East at Sovereign, which is what we're going to call them, but they are officially Sovereign PPG Corporate Services, and she's here to talk about how the UAE's crypto framework has evolved in recent years, why investor confidence remains strong, and also what businesses need to understand as oversight becomes more sophisticated. Zana, it's good to meet you.
Good morning, and thanks for having me here.
You're very welcome. It's good to have you here. I was going to start by saying that the kind of the Wild West days of crypto are kind of gone. We've gone from crypto curiosity here in the UAE to we're well on the way to becoming a global powerhouse in the virtual asset space. How you've been involved in the sector for a good few years here, I know that. How's the virtual asset framework evolved over the past 3 or 4 years?
I have been lucky myself to have good clients and start working in this sector very early on in 2022 when VARA just started.
Right.
And we were in the MVP program. MVP means minimal valuable product, right. And the sector looked quite different. And I had a recent podcast, and we kind of remember those times and kind of made a parallel on. It is not a long time, but what UAE does in like a short period of time is just amazing. Like in 2022, it's not the time where crypto and virtual asset regulation started in UAE. ADGM and FSRA regulated crypto way before that, but FSRA is a financial regulator still, so it regulated crypto within the classical financial services and financial products.
Yeah.
VARA was the first regulator that was specific for virtual assets, and that was a novelty, even globally. There was no other regulator who was established just to regulate specific virtual asset activities, and they were focused on activities, and they were agnostic when it comes to technology or products. Globally, all the other regulators were focusing more on products, whereas VARA took that approach. We will focus specifically on the activities, and that's how we will regulate, and we will regulate just that industry. So that's why I always kind of start with the MVP program in VARA when I talk about crypto, even though the IFC and ADGM did a lot before that, but within that classical financial services and financial institution framework. So it wasn't a specific framework only and dedicated regulator for crypto. So those days when VARA started, MVP program was like a sandbox. They selected around 50 applicants that could apply for the program, and they were learning both. The market was learning, the VASPs were learning, and VARA was learning themselves from testing the regulation. So it worked even from failure. FTX happened around that time as well. So that's how they perfected, in a way, the regulation. So when the regulation came out, in 2023, the FMP, there already was a testing phase with the actual players in the market. So that's, for me, where it all like really started in UAE and where that boom kind of came from. And fast forward 3 years, here we are talking about institutional investors and very high regulation.
It's remarkable, isn't it? I mean, if you look back over you're looking back over 4 years on a podcast last week, it's a whirlwind pace. We've gone from basic guidelines, okay, to highly specialized oversight. VARA, as you mentioned, the FSRA in Abu Dhabi. What, though, are the biggest kind of mechanical changes you've seen in how the UAE regulates crypto in more recent times?
So if you look at just the recent change, the first VARA started in it's on an Emirates level. Yeah. So VARA is a Dubai-based regulator.
That's right, yeah.
when they started regulating the virtual assets, the federal level regulation, where there was the ESCA at that time, didn't have a crypto framework. So VARA started ahead of them. So they already had the MVP program. They already were licensing certain VASPs for specific activities, and issued their FMP, which is the full market framework products, in 2023. And this is where as well then the federal level started to regulate crypto a bit. There was a short amount of time and space where market players were uncertain what will happen, because some of them had a license from VARA. Now there is the federal level regulation coming in. Do they need to regulate twice?
Yeah.
But that clarity came very fast, where ESCA said, we will delegate our authority to VARA. So whoever is regulated by VARA when it comes to Emirates of Dubai, they don't need to regulate with ESCA. So that clarity came very fast. So ESCA was regulating other Emirates, and VARA was regulating the Dubai Emirates. We have now already more than 45, I think, fully operational VASPs licensed with VARA, and there's a lot of an initial approval stage as well. And they all are regulated fully through VARA. That means also they are complying with the federal level regulation. Now, this year, we have seen a massive change where ESCA rebranded themselves to CMA, which is the Capital Market Authority. And they have aligned the federal regulation more to that institutional level to VARA and what VARA did. So now the current regulation is, when it comes to federal level, are much clearer. They have set now the benchmark on what are the allowed activities. They have now 8 activities that all VASPs can license through. Capital thresholds, what are expected, reserves and capital expectations from VASP coming in. What are the activities that are not allowed and restricted, like some algorithmic tokens and a few other things, privacy tokens that are not allowed. And there is a lot of more clarity when it comes to tokenization and issuance between federal level and VARA. When we talk about virtual assets, we can't forget central bank.
Yeah.
So how UAE did it is to kind of divide the risk and who monitors which risk perspectives. VARA is more authorized together with CMA now to actually license the VASPs and their operations, whereas still, whatever something goes into payment or settlement, they would need to regulate with central bank.
Right.
That's how they de-risk that part on payments and settlement for the retail market. And VASP would need to then comply with the central bank regulation. So it sounds complex, but actually it is very clear when VASPs are now coming to the market. It is very clear how they need to be licensed, where they need to be licensed, how they will be monitored, and what are the requirements for them to obtain the license. It's not an easy path, but unlike at the beginning, even in MVP stage, where that was more of a kind of, like I said, a private sandbox. The regulation were not published on VARA's website like they are now. VASPs didn't know fully in advance, before they started engaging with VARA, what are the requirements. Now these requirements are quite clear, not just on licensing, but on operational readiness and what comes after.
I mean, it's complex, but I got to be honest with you, the way you're explaining it, there's kind of a logical methodology to it. There are steps. Some would say hoops to go through, I suppose, but there are a lot of steps, and quite rightly so, because we've seen this space grow from a complete unregulated Wild West space, really, to all intents and purposes, to something that we're looking, that institutional investors are looking at in a remarkably short space of time. I mean, it looks as though it's a much more mature phase, I think, coming up. If you consider the UAE alignment with the Financial Action Task Force, for example, so that you can stay off the grey lists and so that, you can be transparent, and they will come.
Yeah, that's right. Everything that UAE did is intentional.
Yeah.
It was, like you said, it sounds a bit complicated, but it's very phased and structured in a way. At the beginning, the focus was on licensing, how to obtain the license, how to operate. Now the focus has shifted on operational requirements, on governance, on how to attract institutional investors. There was one big as well development in April where VARA issued derivatives framework. So we all know that spot trading was VARA did have a bit of a pilot program for derivatives, but when they issued 2023, the framework, only spot trading, for example, for exchanges as a product was very clear, how they can offer it, how they can operate. When it comes to derivatives, which is a lucrative product when it comes to business profitability of an exchange or institution, it's what is attractive to institutional investors. It was more like an extension to the license that is given to certain VASPs as an exception. That's how they were giving it. It wasn't a clear framework. Now in April, they have now rolled out that framework. One big thing that is happening here is tokenization. We've seen last year the real-world asset tokenization when it comes to real estate in Dubai. VARA has licensed platforms and providers who have tokenized first properties in Dubai together with Dubai Land Department. So there is a big area in that space that is now booming. We've seen in our business, we have a couple of VASP that are currently licensed or in the process to get the license from VARA. However, now that space has been identified of a major interest from investors, CMA came in with the new regulation and said there are certain parts of tokenization that will be, when it comes to financial products, regulated on a federal level, where VARA will regulate the platforms, but there are certain parts that will be regulated even more because it involves real-world assets, it involves probably a lot of investors coming into that space because it's very attractive. So after the property, then comes the commodity, gold, diamonds, So DMCC is doing a lot of things, and I think now in that space, they were also part of that, not Wild Wild West, but part of the non-regulated crypto activities space. They still have now, you still have certain activities in the blockchain industry and crypto that don't need to be regulated. And of course, now we know clearly what are the activities that need to be regulated. So for the activities that need to be regulated, we are seeing more structure, more governance, more compliance, more requirements for audits, risk assessment, because the institutional investors are already here. I think I've read somewhere like around 52 billion came in 24 and 25 into this space, and 50% of that was in Dubai. I'm not surprised because that's the time where in 2023 the full regulation came in, and then a lot of VASPs were focused on VARA and getting licensed there. So we have so many big names, international names now here in the market, and this is one of their strategic, I would say, jurisdictions.
Well, it makes sense, doesn't it? Because we have a very transparent framework. We have regulatory clarity now, and I suppose that means you can look at Dubai, look at the UAE, and there's confidence to draw from that. You can look at this framework and think, I can operate.
Yeah, definitely there is full clarity now on how to get licensed, how to operate, how the regulator would monitor you as well.
Yes. Yeah.
And what is expected from each VASP. On the other side, the question I've been asked more than now about clarity is like, is there any space for startups, small projects? Because now you have, the regulation is so clear and the requirements are high. Is there any space for these small players? And and I always say there is. You don't have to go into the regulated space already. If you're a startup, if you're developing your technology and all of that, you don't need the license immediately. There is the IFC Innovation Hub, even that is focused on technology innovation. There is a lot of free zones and non-regulated activities where you can develop and start developing your technology, putting in place everything you need for the future licensing, getting that decks for the investors organized. But I don't think with now the requirements and let's be honest, the cost of having a regulated license, you don't need to be to a certain round on investment seeds to be able to get licensed. But having said that, I have seen in tokenization space individual kind of owners setting up holding companies and then licenses. So that means, in a way, startup businesses and still going through regulation very confidently. But my view on it, if only like right now, how the regulation works and what the requirements are from capital requirements, from insurance requirements, for people requirements, for operational requirements, a mid-sized to very high institutional WASP could take that burden on going through the licensing and operation in a way that a regulator expects them. And it would be very difficult for a very early stage startup to be able to regulate themselves in that way.
You see, I was going to ask you that very question. If you're an entrepreneur or a startup founder, the compliance burden, I think, is kind of overwhelming, isn't it? So for you guys, what are the 3 non-negotiables that you would tell every new virtual asset business that they have to have in place before they even apply for a license? Where do you need to be to take the plunge, if you like?
So when assessing readiness to license, I would say always I look at, and now it can be very scaled, and there are professionals now in the industry that are focused only on crypto licensing, for example, as well. One of the key things as well has to be the budget. We trim down the cost of licensing, cost of monitoring, cost of operations, and maintaining that license. Also, applicants need to know they need to hire people on the ground. A lot of the crypto businesses, even big firms, big VAS, operate very hybrid and remotely, and they have a startup mindset. Even if they are big and institutional now, the mindset in this industry is very startup-like, and they don't lock themselves very much to a place. Like a tradition, you have an office space, you have people there, so they think they can operate, even license with remote staff. There are minimum requirements, even from VARA, what they expect, who are the staff that needs to be on the ground under this license, locally hired. For example, MLRO and compliance officer is non-negotiable. So you need to hire, and this is now, because a lot of us need that, even the cost of hiring compliance officers has gone up, of course, because demand is there. You need to have a senior manager on the ground. So at least three physically present staff that need to be on the ground here. But depending on the activities, you need to have a physical office as well. Depends on the location and where you license. So that's also investment, that you need to have a physical location. You need to have staff on the ground. Plus, you need to demonstrate other functions from internal audit that you can be outsourced. There are functions that can be outsourced, but if you're having them internally, they need to be. You need to show independencies to VARA. That's part of the governance. Corporate secretary, we as Sovereign act as corporate secretary for many VASPs. That's actually an independent role, and it requires a lot of work. And usually, if it's outsourced as well, it's costs. Of course, if it's internal as well, you have to have a person that is independent from the board and from the local staff. There is a requirement to have a NED, which is the non-executive director as well in the board. So a lot of, I would say, a lot of things that were part of a failure of some crypto exchanges and VAS previously, VARA has fixed when it comes to governance, asking for very true independencies on certain roles and transparencies and how decisions are made. But that also gives additional burden to VAS. Then depending on activity, you have, of course, capital requirements that need to be there. It's fixed. You cannot lose it for liquidity, for other operations. Insurance costs, I know it was always a big issue for a lot of us because insurance in that industry is very costly. So there is a lot of elements when it comes to licensing to consider. And of course, if you have to have full policies governance for the specific entity you're getting licensed for. So if some policies you can reuse, of course, localize it. If you have already a regulated entity somewhere else, for example, in Singapore, you can use a lot of your governance policies, AML policies. But usually, VAS need to reproduce policies compliant with local regulation. So there will be a cost as well for them to have local providers look at those policies and help them shape them as per the requirements. If it's VARA, if it's FSRA and ADGM, depends where are they getting licensed. So there is a lot of elements that they need to put in place to even consider, can we go to that process?
Yeah. I was going to say to you, take a breath. I mean, there's a huge amount to think about. But you know, the thing about this is listening to you outline this, I'm naturally a little bit crypto cynical, if I'm honest. And that's based on, what I read, and I'm not involved in the space, so it's slightly unfair. But I feel more confident talking to you as you're kind of listing what's necessary to operate in this market. And I guess that's a positive thing. I wanted to ask you, in terms of client demand, you're in this space every day. How's it changed as the regulations and I suppose the expectations have evolved?
There was even initially when UAE started looking at this space as a strategic area,
right, and
did a lot of investments to develop the ecosystem, there was a lot of demand. But right now, if we say that phase of market curiosity, research, attracting VAS, has developed into VAS wanting to come here to be themselves attractive for institutional investors.
Sure.
So having a license from UAE, from VARA, is for them an add-on, as something that they can, have as a bragging point as well, as a point of getting themselves as well more seeable out there for different. Depends on the strategy, what they are looking for. Or having an additional regulated license for the customers and giving more confidence to the market because they have to differentiate themselves. There is now a lot of players in the virtual asset space. So it's not only Binance, there is so many, before we would hear only on one provider, but that now there is so many exchanges, everyone is building their brand. So part building of the brand is also, I have a VARA license now, or I have a FSRA license, the FSA license. So that's kind of as well where we came. But yeah, I would say this space now is a full industry on its own. It's a huge ecosystem. There are free zones as well that did well, and they were at the beginning, like the WTC, where VARA is also placed. They have also in Incubator have a lot of ASA placed there. DMCC has the specific crypto gaming and AI center, so they have developed as well. They do a lot of events, market outreach. There is a lot of players there, DIFC with Innovation Hub. So there is also a lot of free zone authorities that are working with the market to kind of attract them, whereas the regulation now itself is already mature. So they don't need to work more. They have, of course, internally, VARA has also worked, let's say I'm comparing VARA, to improve their own processes. They started in MVP with an Excel sheet, then SharePoint, now they have the portal, and internally they have more people. There's when it comes to us as professional providers, when I started, there was not many kind of into this space. Now there's a lot of providers as well who can actually, on a very high level, support the VAS, and they are just focused on this space. Like Sovereign is not focused on one industry. We work with all industries cross-border, but there are providers that just focus on virtual assets and focus only on licensing with VARA. So that's how big the space is. So I would say that's how you measure the market.
God, no, that seems to be a reasonable way to do it. And I suppose as well, the regulatory approach here in the UAE is at a point where other markets are looking and thinking, that's a good way to do it.
Yeah, definitely, because UAE was the first, as I said at the beginning, to ahead of everyone else to be that bold, because all the other jurisdictions were kind of waiting and looking what everyone else was doing.
Yeah.
Where UAE did make that bold move by saying, okay, we will have a dedicated regulator only for this space, and we will regulate it in a different way than everyone else. They could do that because in general, the UAE and even GCC, when I compare it to common law jurisdiction, for example, to the UK, where you have a company house, you get your your registrar extract for the company, you get your company registered in seconds, but that company is just registered. It doesn't say for which activity. You do that by doing business. In UAE and GCC, that concept was always different. What actually you're doing, your business activity is what matters, because that drives everything else. That same applies in Saudi, in here, in Qatar. Depending what is your business activity, your regulation and licensing I will tell you licensing when I know your business activity. So they applied the same concept as well for virtual assets, where they determined what are the approved activities for virtual assets, and based on the activities, that's how we will regulate you, not based on your product or your technology or something else. Whereas the rest of the world as well try to fit in virtual assets into the institutional, like classical financial regulators, like central banks and all of that, and put the regulation of virtual assets under that to try to fit it in. Yeah. And that's why I think it never worked fully. Whereas in UAE, they developed only a specific regulation for virtual assets, because yes, they are similar to financial product, but they are not the same. It has to be regulated very differently because technology is such a big part of that. And having specific controls on, like, for example, I had to learn a lot of these from my clients as well, like separating the hot and cold wallets for controls, why this has happened and all of this. So there is a lot of specific things that need to be incorporated in the regulation for virtual assets that are not there for other financial regulated products. So that's why I strongly believe VARA worked this well, is because it was just for virtual assets. They don't do anything else.
Crypto regulations and rules are evolving fast. We're way over time, unfortunately. Zana Jablan Musa is the Operations Director for the Middle East at Sovereign PPG Corporate Services, with us at Mirror Business FM this morning. Thank you for coming in.
Thank you for having me, and I seem to be very passionate about this because I talked way too much.
You are remarkable knowing your stuff. Thanks, Zana.
Thank you so much.
This is Mirror Business FM.